welcome to the deep dive. If you strip away all the breathless headlines about, like, trillion-dollar tech valuations, you start to notice a very specific pattern in the market today.
Right, the real action is usually hiding somewhere else.
Exactly. The most critical bottlenecks in the global economy usually aren't the household names at all. They're these obscure, heavily integrated components operating deep in the background. And that is exactly where we're pointing our lens for today's deep dive.
Yeah, we are looking at a stack of investment research focused on a semiconductor foundry called X-FAB.
Right, and X-FAB is, well, it's a company with a market cap hovering right around just $1.28 billion, which, I mean, in the semiconductor universe, that is basically a rounding error.
Oh, absolutely. It's tiny.
But, okay, let's unpack this. Going through this source material is honestly like finding a winning lottery ticket hidden inside a stack of boring technical manuals. Because whether you're an investor or just a tech enthusiast, this research connects this relatively small player to the most advanced hardware architecture at Nvidia, to massive government subsidies, and really to the future of Western supply chains.
It creates a fascinating asymmetry, You have this mid-cap valuation applied to a company situated at multiple critical choke points in the tech supply chain.
Yeah.
We're seeing this convergence of bleeding-edge materials, science, and geopolitical maneuvering, and it's all seemingly masked by the company's traditional legacy business.
I really want to break down exactly how a physical bottleneck of that magnitude hides in plain sight, especially for those of you listening who track the tech sector closely. We're going to dig into the balance sheet and the valuation setup shortly. But to understand the numbers, we first have to understand the specific technological wave this company is riding.
Right, the underlying catalyst.
And in today's hardware cycle, all roads lead back to Nvidia. The notes indicate X-FAB has exposure to Nvidia's 800 VDC power semiconductors, pushed through a company called NVTS. But the much larger focal point here, the really exciting part, is Silicon Photonics.
Yeah, that's the big one.
The research states X-FAB is actually in the evaluation stage for high-volume manufacturing of silicon photonics and co-packaged optics, or CPO, specifically for optical transceivers and switches destined for Nvidia.
And to really understand the weight of that, we have to look at the physical limitations of current AI hardware.
Right, the heat problem.
Exactly. When you cluster thousands of GPUs together to train a massive AI model, those chips have to talk to each other. And historically, they send data using electrons traveling over copper wires. But copper has a terminal velocity.
It can only go so fast.
Exactly, and more importantly, it generates just an immense amount of heat and signal loss when you push data through it at those insane speeds. So, Silicon Photonics abandons the electron entirely and uses the photon. You are literally etching microscopic waveguides into silicon to transmit data using lasers.
Lasers on a microchip.
Yes. It is exponentially faster and it runs drastically cooler.
And the co-packaged optics part of this equation, that seems to be the holy grail the industry is chasing right now. Because from what I gather in these notes, the traditional method involves keeping the optical components at the edge of the board, somewhat separate from the main processing chip.
Right, which forces the data to still travel over a physical electrical bridge to get to the laser. So you still have that bottleneck.
Right.
Co-packaged optics physically integrates the laser and the photonics directly onto the same substrate as the silicon chip itself. You eliminate the distance.
Wow.
But the manufacturing precision required to align microscopic lasers with silicon pathways at scale is notoriously difficult. It's a massive yield challenge.
And the source notes highlight that X-FAB is in the evaluation stage to be the high-volume manufacturer for these specific components. And, the timing aligns with a major legislative catalyst happening today, which is the rollout of the EU GHPS Act 2.
Yeah, and that act is heavily structured to subsidize European photonics development specifically.
But I have to push back on the market mechanics here. I mean, if you have a $1.28 billion company sitting in the evaluation stage to manufacture co-packaged optics for the absolute titan of the AI boom, Nvidia, how does the broader market completely miss that?
It's a great question.
Like, algorithms scrape every SEC filing and press release for the word Nvidia or photonics. This feels like a relationship that should immediately trigger every quantitative momentum screener on Wall Street. It's like a world-famous actor doing an indie film under an assumed name.
Right.
Like, only the superfans or the deep dive analysts even notice they're in it.
That's actually a perfect analogy. The algorithmic blindness occurs because of how financial data taxonomies actually function. The author of our source points out that X-FAB is running this silicon photonics initiative under a distinct alias, which is Photonics CPO.
Photonics FAB.
Right. And quantitative algorithms are highly rigid. They scrape data tied to primary entity IDs and parent ticker symbols. So when a company structures a cutting-edge joint venture or an advanced R&D segment under a subsidiary name,
It just bypasses the primary keyword triggers completely.
exactly, it gets classified as an isolated research project rather than a core revenue driver for the parent ticker. And the author cites a historical precedent for this in the notes. They point to a previous market setup involving a company called TSM, where a similarly massive, highly lucrative relationship was effectively obscured from top-line screeners simply because of how the subsidiary reporting was structured.
So the automated systems are looking at XFE's legacy automotive revenue streams, completely missing the Photonics F8 alias operating in the background.
Right, which is why manual synthesis, reading the actual supply chain documentation still reveals these huge inefficiencies that automated scraping misses.
That structural blind spot totally makes sense. But it brings me to the physical reality of the company itself. Because XFAB doesn't design these components. They are a foundry. They are the actual physical manufacturers.
Yes, they make the physical goods.
And the source material highlights that their value isn't just in photonics, but in the actual materials they're capable of manipulating. Specifically, they're cited as the only high-volume silicon carbide, or SiC, foundry in the United States. And to clarify for you listening, it's not about writing the world's best cake recipe. It's about owning the only industrial oven big enough to actually bake it.
I love that. And silicon carbide represents a massive leap over traditional silicon, particularly for power electronics. Standard silicon has a relatively narrow band gap. When you run high voltages through it, like the 800-volt systems in modern EVs or the massive power delivery networks for AI data centers, standard silicon leaks energy as heat. It becomes highly inefficient.
Right. It just can't handle the load.
Exactly. Silicon carbide has a much wider band gap. It can handle extreme voltages and temperatures with minimal energy loss.
But okay, if SiLiC is so revolutionary and the margins are so attractive, why doesn't a behemoth like TSMC just pivot a fraction of their capital and bulldoze a smaller player like XFAB out of the market?
Yeah.
Like, why is this relatively small company the only high-volume silicon foundry in the U.S.?
Well, it comes down to the brutal laws of material science. You cannot simply retrofit a standard silicon fab to cut and etch silicon carbide. Standard silicon is grown in these cylindrical boules that are relatively easy to slice into wafers.
Okay.
Silicon carbide is incredibly hard. It actually approaches the hardness of diamond.
Oh, wow.
Yeah, so growing a silicon crystal is a slow, high-temperature, highly volatile process, and the boules are riddled with microscopic defects. Slicing and polishing those wafers without destroying them requires entirely different tooling, different chemistry, and just years of process engineering to achieve any sort of profitable yield.
So the bottleneck is the physical expertise.
The barrier to entry isn't just money. It's the steep, painful learning curve of manipulating the material at a molecular level.
And beyond the secrecy capabilities, the notes also designate them as a critical MEMS foundry, microelectromechanical systems. So we are talking about manufacturing microscopic physical machines, sensors, and actuators directly onto silicon.
Which requires an entirely different set of lithography and etching skills compared to standard digital logic chips.
Right, and we aren't just taking the company's PR department at their word regarding their importance either. The author provides a very rigid, unglamorous piece of proof here. The source points to another prominent power semiconductor company, POWI, and highlights a specific supply chain document, PCN 202-181. And in this document, POWI explicitly names XFAB as its foundry.
Yeah, a product change notification, or PCN, is the ultimate reality check in semiconductor analysis. When a chip designer alters anything about how their product is made, whether it's a new packaging material or a change in the physical foundry, they are legally required to issue a PCN to their end customers.
So it's a hard, auditable footprint.
Exactly. Seeing X-FAB explicitly named in QAJI's regulatory documentation confirms their critical manufacturing role in the power semiconductor space. It strips away all the marketing fluff.
Okay, so we have a physical manufacturer that has mastered the chemistry to produce silicon carbide at volume in the U.S. They're deeply entrenched in MEMS, and they're working on co-packaged optics for the largest tech companies in the world. But operating these specialized fabrication plants is violently expensive.
Oh, incredibly expensive.
The capital expenditure required to maintain and upgrade these facilities usually just crushes the balance sheets of mid-cap companies.
Because the depreciation cycles on semiconductor tooling are just relentless. A state-of-the-art lithography machine or a high-yield 6 etching tool can cost tens of millions of dollars, and they become obsolete incredibly quickly. This is the structural reality that usually keeps companies of X-FAB size from competing at the bleeding edge.
Right. And here's where it gets really interesting. Because X-FAB isn't bearing the full brunt of those equipment costs, the investment thesis leans heavily on the fact that this company is being systematically backstopped by Western governments.
Yeah, the numbers are wild.
The numbers outlined here are substantial. X-FAB is slated to receive 128 million euros from the EU GPS Act. And simultaneously, they are pulling in a $50 million PMT from the US GPS Act via the Department of Commerce.
And the author projects that with additional funding rounds anticipated, we are approaching a scenario where sovereign capital is effectively funding a massive portion, if not the entirety, of X-FAB's near-term capital expenditures.
Wait, so you're telling me that governments are basically buying their expensive manufacturing equipment for them? This sounds like a business cheat code. I mean, I look at those numbers and I have to ask, is this just a government bailout masquerading as a strategic tech policy? Like, if a company requires hundreds of millions in taxpayer subsidies just to buy their equipment, does that point to a fundamentally broken, uncompetitive business model?
If we were looking at a standard consumer goods manufacturer, absolutely. But semiconductors have fundamentally decoupled from traditional free market economics over the past 5 years. The supply chain shocks of 2021, coupled with the rising geopolitical friction over Taiwan, it forced a massive reckoning in Washington and Brussels.
They realized they were exposed.
Deeply exposed. The US and the EU realized they possessed almost zero domestic capacity to manufacture the specialized power and optical chips required for everything from energy grids to missile guidance systems.
So they are treating X-FAB less like a private enterprise and more like critical public infrastructure.
Exactly that. The governments are physically buying supply chain redundancy. From a purely financial modeling perspective, when a government steps in and absorbs your CapEx burden, it radically alters your free cash flow generation.
Because you aren't paying for the tools.
Right. The company gets to utilize state-of-the-art equipment to generate high-margin revenue without carrying the massive debt load or the crippling depreciation schedules usually associated with that equipment. It artificially, yet permanently, boosts their return on invested capital. Furthermore, the author guesses X-FAB will likely be included in the upcoming EU GPS Act too, precisely because that legislation targets the photonics sector X-FAB is already expanding into.
Okay, but that sets up a very contradictory financial picture. Because we have a company sitting on rare, high-barrier manufacturing tech, funded in large part by sovereign wealth. Yet the source notes their valuation is severely depressed. They are currently trading at a price-to-book ratio of roughly 1.29.
Right, barely above book value.
The market is valuing the company at just barely above the liquidation value of its physical assets. So if the photonics and silicon carbide wings are so promising, what is dragging this valuation down into the basement?
The author identifies the culprit as a massive legacy drag from the automotive sector.
I want to make sure I understand the mechanics of that drag. It's like buying a structurally perfect house for the price of just the bricks, simply because the current paint job in this case, legacy automotive, is just completely out of style.
That is a highly accurate parallel. Foundries operate on massive fixed costs. They need high utilization rates, meaning their production lines need to be running constantly to maintain their profit margins. X-FAB has a very large legacy business manufacturing standard, older generation chips for the automotive industry.
And the auto industry is struggling.
Yeah, the automotive sector is currently working through a brutal inventory glut. Orders have slowed, which means X-FAB's legacy production lines are underutilized, which drags down their top-line revenue and their overall margins.
Oh, I see. So the automated trading algorithms see declining automotive revenue and punish the overall ticker, regardless of what Photonics FAB is doing in the background.
Precisely. But the author's entire thesis hinges on the fact that this dynamic is temporary. They are projecting what they call a Soitec reversal. So Soitec, under the ticker SOI, is a company that went through a nearly identical structural shift.
Yeah, the notes mention the analyst previously went long on Soitec when it was sitting at a very similar 1.29 price-to-book ratio.
Right. So Soitec was weighed down by a legacy business focused on depleted silicon on insulator tech, which the market hated at the time. But they were quietly pivoting their manufacturing toward highly lucrative RF and power components. Once the high-margin revenue from the new tech finally outpaced the drag of the legacy business, the financial metrics flipped, the algorithms caught on, and the valuation exploded.
And the analyst sees X-FAB following that exact same trajectory. As the legacy automotive inventory clears, and as the high-volume silicon carbide and co-packaged optics lines come online, paid for largely by the EU and US governments, obviously that legacy drag will evaporate. And the math they project for this reversal is aggressive. The author estimates a 6.5 to 8.5 forward price-to-earnings ratio for the year 2028.
Which is huge. A forward PE in the single digits for a company entrenched in silicon photonics and AI power delivery is a glaring anomaly. The market is currently pricing X-FAB as if it will forever remain a cyclical low-margin auto parts supplier. If the transition to advanced power and optics materializes, a 6.5 to 8.5 PE implies the stock is fundamentally mispriced right now relative to its future earnings power.
It requires a belief that the transition is inevitable and that the government funding will serve as a bridge over the current automotive downturn. So what does this all mean? When you synthesize all the notes we've covered today, the profile of this $1.28 billion company is entirely different than a surface-level stock screen would suggest.
Completely different.
The market sees a sluggish automotive supplier suffering from a legacy drag. But when you pull the supply chain documents and the capital flows, it reveals a critical node in the U.S. Silicon Carbide footprint. It reveals a hidden partner in Nvidia's explosive optical future under the name Photonics CPO, and it reveals an asset deemed so vital to Western security that governments are openly financing its infrastructure.
It really is a wild convergence, and, it forces us to ask a rather profound question about how we analyze these types of equities going forward.
What do you mean?
Well, if Western governments are now willing to step in and entirely fund the capital expenditures of specific critical foundries to protect national security, we have to ask, are traditional financial metrics like price-to-book ratios becoming obsolete for these specific companies?
Oh, wow.
Right? If a company is deemed too critical to fail by both the US and the EU, perhaps the free market simply doesn't know how to price national security yet. Assessing their risk profile using standard metrics might just be broken.
That is a remarkable thought to end on for you listening today. The idea that the deepest value isn't always found in predicting the next tech giant, but in finding the hidden infrastructure that those giants rely on to function. Thank you for joining us on this deep dive. We will catch you on the next one.